Hi, this is Curtis from BeyondBacktesting.com, and today we're going to talk about how to get out of the losing rut or ideas for getting out of the losing rut. Obviously, futures trading is risky, and this is not investment advice. So, I originally titled this "How to Get Out of the Losing Rut," but it may not work. You know, it's a range of possibilities. So we're going to talk about ideas for getting out of a losing rut. Now, the first thing we want to do is identify. Step one, you want to identify the cause of the losing rut, and I can give you some examples. um, Mistaking activity. I'll do it this way. Mistaking activity, some causes, right? You want to identify some, one cause is mistaking activity for progress. So one of the things, I've been in many losing ruts, but one of my losing ruts was caused by basically just spinning shares and equities, and just when I'm just kind of mindlessly spinning shares. Sometimes it's profitable, sometimes it's not, but it's really not. There's really no purpose to it. It's just like, let me get in there and make some trades. That way, I feel like I'm making some progress. And why would I be doing that instead of what I need to be doing? That's kind of a low return activity, right? Just kind of spinning shares, especially when you can call the market, when you have the ability to place good trades or find good trades, or you have systems that have edge. What would be the cause that would cause somebody to do that? And the cause is oftentimes risk aversion, right? B would be risk aversion, right? Yeah, I've got some real trades I can put on real trade, but if I put on a real trade, I'd have to give it some risk. I don't want to give it any risk. So that risk aversion can also show up in your trades too, individually. And most of the times when I've compared system trading results to the way I trade it, most of the time the system is less risk averse and the system will win because of that. Will produce a higher profit. Now, I will say, if you have some ability to read the market and you're reading the market well, you may be able to improve the risk adjusted return, but you're unlikely to improve the net profit of just taking your trade in a set way. Dependent on the size of your edge. I don't want to get into that. It gets kind of complicated, but the larger your edge, the higher the opportunity cost of trying to avoid a loss. The smaller your edges, you can avoid more. You can avoid the winning trade more often, particularly if you get many trades. But at any rate, risk aversion. So, example is you have an entry, and you take your stop's supposed to be a set amount, and instead you take it off for a small, or your target is supposed to be a set amount up here, and instead you take it off way down here. You take it off right here for just a small, tiny little profit. And of course, your stop, when you get hit with a stop, you take your full stop loss. This risk aversion can completely mess up your risk profile for your trades, right? And so that risk aversion shows up in the activities you do, and it also shows up in also in how you place trades, right? Getting out of a risk aversion is going to be very important if that's your cause, and I found that's my cause often. The other thing is you want to listen to why you may be risk averse, right? And oftentimes it may be because you haven't did the work, right? You've not did the appropriate amount of work that you're supposed to do. So instead of doing the low return activity, do the high return activity. And put in the work, right? Would be the solution or thinking to that problem. Identify your low return activity, do the high return activity. So if your low return activity is flipping equity shares, right, when you should be working on your trade, and that makes you feel like you're making progress, don't flip those equity shares, right? If your risk aversion, if you don't want to give the trade the risk you need because you're losing too much, you need to work on your setups, you work on your trades, find some higher probability trades, do some back testing, do some market replay work, depending on the type of trader you are, right? So we want to identify, we want to work, we want to identify, identify, step one. It's often going to be risk aversion. It's often going to be mistaking activity for progress. It's going to be a cause. There are some other causes. Markets can change, right? Sometimes you get to do something that used to work, and you just do it all the time, and because it worked before, you stop thinking, you kind of become on autopilot. That can be a cause too. Looking for market changes, right? So we'll identify the cause. identify what changed. Let's say you were doing very well before. You want to, I'm going to say take a pause. I'm not saying stop. I'm just saying take a pause. Take a pause in your current activity and evaluate it. Okay? You want to add purpose to the activity. If you continue, you want to have a purpose, right? And identify, pause, purpose, and then we want to go from risk aversion to risk acceptance. You don't want to become risk aggressive when you're losing, and that would be a big mistake because the market may have changed. There may be other causes to your losing other than just risk aversion. We want to go to risk acceptance, which is a more rational type of a looking at the risk aversion and just saying, I'm going to accept the trade on this. I'm going to accept the risk on these set of trades and get the expectancy, right? Versus doing something that would, versus trading in a risk averse way, which may lower my risk and my expectancy. So we go to risk acceptance, and then, right, discipline, right? So we're going to talk about each of these. So I'm going to say this is your step, your outline for getting out of a losing rut. Identify the cause, identify what changed, pause, purpose, risk acceptance, and discipline. Oh, well, one other thing, right? Just work, right? So there's 6 steps, okay? First, we'll say this. First, you pause, okay? We'll say you pause first, right? First, you pause. You're going to stop what you're doing. You're going to identify the cause. You're going to add purpose to whatever it is you're doing or do something different. You're going to put in the work to make the changes necessary. With that work, you're going to have risk acceptance, and finally, you're going to apply that with discipline. And this is your 6 steps. Okay. Now we'll talk about some other causes of this. What may be some other causes and risk related, especially related to risk aversion. Is one thing is the illusion of the risk-free trade. And this is a trade you get into. You think, okay, this manifests often in traders who say they're going to put a stop loss on a trade, but they're not going to let this trade hit the stop loss. And you may be able to do that 6 times out of 10 or 7 times out of 10. You're never going to do it 10 out of 10 times. It's never going to be something. And so, whatever that risk is, this really, especially if you get good at this can really bite you if you really believe this, that, hey, you can control that risk because the markets are so fast today. Eventually, you're going to get stopped out for your full amount. So you pretty much got to, accept that as a possibility. The illusion of risk-free trade also goes into, again, activities where you may be trying to flip shares or whatever. Okay, I'll give them a small amount. I'll average and add down. And, I'll be able to get out for break even though I know I'm not going to make much. I'm not going to lose anything. Well, you think you're not going to lose anything. But, especially when you don't have the purpose, your mindset is not on winning. A lot of times my largest losses have came in getting into the market. Say, I'm not going to risk anything. I'm not prepared to trade. I'm not really in the mindset to trade. I'm not really trading. I'm just going to play around, flip some shares. All of a sudden, I've taken these losses. I'm like, wait a minute. I shouldn't be down this much because I wasn't even trading large. But the thing is that you're in the market. You're going to get involved. And it's very easy for that to happen. So just be aware of this risk-free trade illusion. And again, just because if you say, look, most of the time it doesn't, means some of the time it will. Right? Another thing we'll talk about is varying your position size. So I want to talk about also trying to be a great trader, okay, or trying too hard to be a great trader. And this has been my bane. It's been a problem for me for a long time, actually. And, what's a great trader anyway? Who's to say what's a great trader? I don't even know what a great trader is, right? You make some people make money that are, who do stupid stuff. Some people make money and lose money. But I think this is, this comes from that performance mindset. And you need some performance mindset. Yes, you have to have a performance mindset to develop, to work on your trading. If you take it too far, then it's been my problem a lot of times. It was the reason I fell out. If you remember the story I told I talked to you about the time I had passed the prop trading trial and I was trading too large after I'd already passed. Why would anybody be trading? Yeah, they said I had to trade aggressively. Um, this was a firm, a prop firm, claimed to be. I'll give you the story. Claimed to be trying to build out a trading desk and was doing the futures trial. You paid to trade, and I'd already passed twice. Long story short, I already passed twice. First time, the technicality got me. The second time, I'd already passed. I already met the profit target. Why was I trading large? Why was I trading aggressively? There's no rational reason for it. Yeah, they said I had to trade aggressively, but let them come back to me and say that's not aggressive enough, right? Clearly, I was trying to prove myself. That's the only reason is I'm trying to prove myself. I'm trying to prove I can do it instead of being rational and saying, okay, you've done this difficult thing. Step back off the gas, and I would not because I was just determined to prove that hey, I could do this. But that's not profitable trading. Um, the other thing I've always thought, some things I thought said, hey, I'm a better trader than this guy, quote unquote, a better trader, right? But what does that even mean? So in my case, sometimes I see a trader who has maybe one trade they do, one trade, right? One edge. And, sometimes you'll see these traders who claim to be making 6-7 figures off this one little edge and like, hey, I can call the market I have all these different skills, all these different trading abilities or whatever. I can call the market from many times a day and with high accuracy. But what does that really matter, right? Who's just the guy who has a one little trading edge? If he's making being profitable on it, that's the end goal. It's not that, yeah, you might be able to call the market all day, but nobody's forcing you to trade all day. Nobody's forcing you to call the market all day. So yeah, that's the other thing is that, hey, maybe you'd be better off to be that guy with that one high confident trade. If you think about, thinking about it, think about if you're trying to build up, let's say you have you think about RPG games where you have a limited set of skills, a limited set of attributes, right? And you can give yourself different attributes for different capabilities. Well, most people want to be all around balanced, right? You want to be, say good looking, strong, intelligent, you want the whole set, but you have a limited set of abilities. If you wanted to be, in ways the economy works with specialization, if you want to be, to get a high salary, you may want to adjust those attributes around to where, hey, maybe you're not quite as good looking, but maybe you have a super intelligence or some kind of super math ability or something would translate into a higher salary, right? Or a higher ability to make an income. That's kind of neither here nor there. But again, trying too hard to be a great trader. And we got to about varying position size here. So one of the things that's contrary to what a lot of people believe is that, hey, your ability as a trader in terms of being able to call great trades or see great trades is directly related to how much you make as a trader. And I have found that is not the case. It is not the case, at least in my case. Okay, it's not the case. It could be the case, but only a certain set of rules have to be followed for that to be the case. I would say trading performance is only loosely correlated with what you make. And, again, why is that? One is because what does it even mean to be a great trader, right? I don't know, right? Who knows what it means to be a great trader? Is a guy who can trade all day and be profitable and trade from any point in time, any market, is that the great trader? Or is a guy who places one trade a day a great trader, right? It's just not even worth thinking about. It's not even worth bothering with to think about that. But yeah, so, but again, if you want your results to be statistical, some things you have to do is not vary your position size. Okay, you have to take a constant position size. And the problem with this for many discretionary traders, myself included to a certain extent, is that honestly, I don't have enough confidence to be able to place a trade unless I've traded several trades and I've kind of got a feel for how the market's moving. And so I kind of use that varying position size to do that, just to kind of get the feel for the market. The problem with that is, though, is that once you start varying position size, one, in the trials recently, I blew 2 trials recently because I was trying to take 10 contracts in a high confidence trade, got me with like one tick, and then it ripped higher. So if you're going to do this, you want to do it smartly. So we'll say, I'm not saying you can't do this, but if you're going to vary position size, you want to do it intelligently. And that means, what does that mean? That means having a systematic way you're doing it, and you follow that. You don't choose on the fly. Okay, I'm gonna load up on this trade because I'm high confident in it. Because yeah, it tends to be. I tend to win about 70% of the time when I have a high confidence, but that doesn't mean that means I lose 30% of the time, right? And if you start changing the stop loss, your ratio also changes too. And so right. So if you're gonna vary position size, do it in a systematic way, right? So an intelligent way to do this would be, okay, if you're going to trade, if you're trading, let's say if your confidence is less than 6 or 6 or less, that's a sim trade. Okay, that's a sim trade, or you don't take it, you just take it in your head. You maybe put up a sim dom or a sim order book. Just be careful with that. Take it in the sim. If your confidence is okay 7 to 8, you take that at your standard lot size. Right? Let's just call that one lot. Okay, one contract. If your confidence is 8 to 10, 8 or the 10 or higher, even right, that's a 2 contract. Right? If you have a confidence that's 11, 12, or 13, you don't keep adding contracts. It's just a 2 contract trade. And that's type of a method could work. The other thing you could do is simply, if it's less than an 8, you don't. If it's less than 8, you don't take it. And if it's 8, let's say if your confidence is less than 8, don't trade. You don't take that trade. And if your confidence is 8 or greater, you take it at 2 contracts. Right? That way your position size is constant for every trade. Either of these methods can work. What will not work is just putting a ton of shares on when you're highly confident, or a ton of contracts. That can really do a lot of damage. And it's the reason I, again, blew out 2 of the most recent the trials was because I was doing that. This also often happens on system trades. And why is, one of the reasons I was loading up was because I didn't have the confidence. So when you try to load up on one of the causes that causes traders to try to load up on a trade, especially a system trade, especially if you're doing mixed trading, is a lot of times you may be trying to get those system trades to using those system trades or those edges, so to speak, to maybe to erase some losses that you incurred from your discretionary trade, right? And so you don't want to be doing that either, because one of the other ways I've taken losses, right, has been when I take a system trade and try to because I know that the edge is there, try to put more contracts on it than I back tested it for. So you see if a trade got an edge, and if you do that, what are you really doing when you try to you're taking that system trade that you back tested, that you have the data for, and you know how you're supposed to trade it? Why would you be doing that? And it comes from not being confident, not believing there's plenty of opportunity in the market. It comes from basically a lack of confidence. You don't have confidence you can make money in the market, so you need to make as much as possible. There's this signal, and the problem is once you do that, you've changed the system, you've changed the odds. The probability is no longer what it was in your back test. Okay, so that's another thing is loading up on trades, and again it comes from a lack of confidence, right? And instead of doing that, instead of loading up on that, on build more systems. And this is one thing I didn't with the systems I didn't fully get when I first built some of my first systems is, hey, you can build more than one system. You can build a portfolio. So don't try to make everything on one system. That's just not the way to do it. You want to have multiple systems and allow those systems to trade as they're designed. Not try to to load up on one system in a way that wasn't developed for it. So so I think this is pretty good. We talked about variant position stuff. We talked about the illusion of the risk-free trade. When you have that the risk-free trade illusion, is this idea, okay, you're not going to take a stop loss. You go ahead and plan on taking that stop loss, even if you can avoid it sometimes. You're not going to avoid it every time. Markets are just too fast these days, right? You're not going to avoid it. Or if you have a large stop, you're going to be hitting it these days because the market moves so much, right? So hopefully this will give you some ideas for getting out of losing rut. The 6 steps, right? It's going to be take a pause on what you're doing, okay? You want to identify the cause, and you want to look to probably risk aversion, lack of confidence, and wanting to create activity, right? Or low return activity. Okay, trying to overdevelop yourself as a trader. How many times have I made money in the morning and give it back in the evening just because I wanted to prove I could be profitable in the evening? And that's so many times I've lost doing that. You think I'd learn, but it's that trying to prove yourself. All these can be reasons, right? And the reality is, when you have a trade on, there's no control. The market will do what it will do. There's no control on that, right? Purpose. Okay, once you've identified some calls, you want to reevaluate what you're doing and give it purpose. Give some purpose to what you're doing. Reevaluate, infuse it with some purpose. Do additional work, so you're not building false confidence, right? You have some better confidence. Risk acceptance, and we'll say also with this, you also have a planning. Be systematic. And finally, you take your discipline and you apply that. And this may not work immediately to get you out of your losing rut, or we'll say, it may not be something that you just do 1, 2, 3, 4, 5, 6, everything's fixed. But if you go back to this may be a path or a plan that may help with that. So this is kind of how I'm applying it. This is some of my recent thinking about identifying some losing things I was doing, and hoping this will help. This is kind of the plan I'm going to follow and see if it helps. Again, getting out of that to risk aggression, and getting that risk acceptance will be very, very useful. Hope it helps.